Hello and welcome. You're watching Business Plus. There is no end to the tussle between the Electric Vehicle Association and electric vehicles in general, who have now claimed that they did not get the subsidies for even half the mandated 1 million units that they manufactured up until now. Remember, the Ministry of Heavy Industries has now suspended subsidies for two-wheeler OEMs under FAME 2 as of December of last year, because it says that it has received complaints regarding misappropriation of funds. Now, since the EV makers say that they're awaiting their dues, they have released subsequent statements. Remember, launched in 2019, the Faster Adoption and Manufacturing of Electric Vehicle Scheme, or FAME scheme as we call it, has an outlay of 10,000 crore rupees. It ends in March of 2024. There is a push by EV makers to extend it for 3 to 4 more subsequent years, but it looks like, as per latest news that is coming in, that the government is in no mood to extend it. The government, in fact, reports that are out there are saying that if there is any money that has not been utilized towards FAME 2, as we call it, which ends in March of 2024, the remaining money will go towards FAME 3. Now, these are all news reports, but the tussle between EV makers is still ongoing. The government and EV makers, they're not coming at a conclusion on whether FAME will continue or not. We're going to understand all of that and more. With me in the studio, my colleague Kartik. Kartik, what is the bone of contention between EV makers and the government, and especially the Department of Heavy Industries, which is dealing with
Shweta,
EV makers?
it seems to me that there is right now a data reconciliation problem. And at the same time, there is an audit which is ongoing for the government to really understand that has the utilization of the 10,000 crores allocated, and therein whatever amount has finally been utilized, in some subsidy or the other. There seems to be a tussle that that perhaps there hasn't been the correct utilization. Rather, there's been some misutilization of the funds, which don't fall neither under the FAME subsidy or even the PLI for that matter.
Right.
FAME subsidy was, of course, originated to be a fillip to startups and small companies getting into EV manufacturing, as well as some large companies that are already manufacturing electric vehicles. The mid-sized companies were excluded from the FAME framework. However, I think right now the tussle between, and there's a statement that the SMEV, the Society for Manufacturing of Electric Vehicles, came up with yesterday evening, was that the electric vehicle manufacturers have spent something close to 1,200 to 1,400 crore rupees from their own pockets. Let me explain this to you. An electric scooter which costs, let's say, 1,20,000 rupees. Now, okay, so, just to make it idiot-proof, 1,50,000 is the cap for two-wheelers to avail the FAME subsidy. Now, coming back to the example, let's say 1,20,000 rupees is the cost of an electric scooter. The FAME subsidy subsidizes it by 50,000 rupees. So, the manufacturer is able to sell that scooter to the end consumer for 70,000 rupees. Now, apparently, scooters have been sold to end consumers for 70,000 rupees, but the 50,000 rupees of subsidy has not really come from the FAME scheme, but it has actually gone from the pockets
of the electric manufacturers. So, EV makers are bearing the burden of it.
They are bearing the brunt of it. So, they are saying out of the 9,50,000 odd, 9,50,000 odd electric scooters that got sold, only 4,50,000 have actually received that subsidy of 50,000 rupees.
And the
remaining, that's literally half. And the remaining 5 lakh, more than half in fact, are yet to receive the. What the government is saying, on the other hand, the Heavy Industries Ministry is saying that there is a paperwork going on, there is a bit to try and understand whether the subsidies are correctly utilized or not, and basis that the funds will be released. Okay.
We have a power-packed panel joining us to discuss the road ahead for FAME scheme and electric vehicles in general. Joining us at this point in time, Sudhendu Jyoti Sinha, who is the advisor, infrastructure, connectivity and electric mobility at NITI Aayog. Also with us, Arindam Guha, who is a policy expert. Joining us, Sohender Singh Gill, who is the DG of SMEV. Gentlemen, appreciate you taking time out. I want to go to you, Sudhendu, first. You heard what Kartik said. There is a mismatch, is what SMEV is claiming, EV makers are claiming, between what government claims to have paid the manufacturers as a subsidy and what they really have gotten. Now, SMEV states that 1,200 crore rupees of subsidies have not been paid to manufacturers till date. Who have, and these are the people, they've given discounts to the people who've bought these vehicles. So, essentially, end users like me, if I buy an electric vehicle, I've got the discount, but EV makers say they've not got the money. Is that correct?
So, like I should put it this way, that in the FAME scheme, in the FAME 2 scheme, there is a component of incentive for demand generation. So, if somebody is purchasing 2-wheelers, 3-wheelers, somebody is purchasing 4-wheelers as an aggregator, so there is a incentive component attached to it. Now, I do not have an exact number that what amount government has paid and what claim SMEV is making, but my understanding is that there is a completely well structured, well oiled system whereby the payment is taken forward, and these payments, these incentives, what is recouped to the manufacturers, to the OEMs, this is not in a haphazard way. It is a very well regulated way in which the entire flow takes place. And yes, if there is some issue, that could always be taken up with the ministry concerned, and there is a definite quality parameters. It is not only that you have sold a vehicle and then that entitles you for the and makes you eligible for the incentive. Basically, what you will have to do is that you will have to also accept, you also have to live up to those quality parameters.
Okay.
Then only it would be possible to get those incentives.
What exactly are those parameters, if you could elaborate on some of them?
Those quality parameters are basically quality parameters, parameters with respect to the speed, for example, parameters with respect to the localization percentage, for example. It can't be a stuff which is brought from all over the country, claim that it is made in India. No, only that is assembly. It has to be really make in India kind of component. As I told you, that if the national aspiration is that we want to be globally best, we want to make India a global manufacturing hub on electric vehicles, then how it is possible that you always rely on external players and then try to go ahead? It has to be make in India. If you see the economic survey, it so clearly lays out that by the time we are touching 2030, at least 10 million units, that is 1 crore vehicles of electric, they should be manufactured in India. So that is what the national aspiration is. Yes.
Okay. Let me come to Sohender Gill at this point in time. Sohender, you heard what Shubhendu had to say. There are certain parameters, and the expectation, of course, is that EV makers will live up to those parameters if you want to continue availing subsidy. Your take, sir, on whether the government, we don't know whether the government will decide, of course. The news reports say that the government will extend FAME scheme only depending on whatever amount is left that is not utilized or allocated as of next March. But your take on what Mr. Shubhendu said.
Thank you. Well explained by Sudhendu ji and Kartik, very well put forward. And let me take you to the larger picture. See, today, if the subsidy goes away, the cheapest vehicle, which is CMVR certified, totally localized, will cost at least 1.4 lakhs upwards. On road, 1.5 lakhs, right? And the vehicles which are promising to be like equal performing, which are a little higher speed, they will cross 2 lakhs. So the first and foremost is the right time to pull the plug out of subsidy and let the electric vehicle get derailed, or let it live its own dreams of going down the dumps and again coming up? Because we find that at 2 lakh plus, there is no customer today buying any electric two-wheeler who has a choice of buying a 80,000 or a 90,000 worth of a petrol two-wheeler. So first and foremost is the larger picture, that it's not the right opportune time to pull the plug of subsidy. Second is, when in 2019 this FAME scheme came, everyone in the country, including NITI, Aayog and many private organizations, MOSRT, declared, and even Prime Minister gave his sort of backhand on that majority of two-wheelers, because two-wheelers are the low-hanging fruit, majority of two-wheelers in 10 to 12 years should be electric. Which means by 2030, and there are figures being quoted everywhere, by 2030, a large part of those so-called, today, we are at 1.6 crores petrol two-wheeler. By that time, it will be 22 crores. a majority of that should be electric. Say around 1.5 crore should be electric.
70% need to be electric.
So we are following a journey of around 12 years to make it 1.5 crores electric, in which the first 4 years, if you just work back, should have been at least 2 to 3 crores, if not more. Just by working back, if you want to do really, no, not to 2 to 3 crores, 20 to 30 lakhs. So out of that, now we are talking of 10 lakhs in 4 years. That we have done 10 lakhs in 4 years. That is what the FAME is claiming, that we have almost completed 10 lakhs in 4 years, so we need not subsidize anymore. So that is one of the point of contention, that is it good enough, or if not, then what else to do? Second part is, out of this 10 lakhs, as claimed by one of the petition by one of our SMEV members, is that out of 10 lakh, at least give acknowledgement, acceptance to the 16 or 15 EV two-wheeler members who have been doling out their own money for last 12 months or so, up to around 50% of this money to make it happen. So out of 10 lakh, it is around 50-50 paid by the government and 50% paid by the customer. So let us acknowledge and accept that industry has equally contributed. And if it was only the FAME to government money, it is only 500,000 or 600,000 that has supported the two-wheelers. The rest of it has been supported by the electric vehicle OEMs, and there are around 14-15 of them who are under sort of issues or interrogation, like Sudhendu Jyoti is saying.
Okay.
The third part is that this issue has become a bone of contention because of the time, and it has taken around 12 to 15 months to reach some conclusion. The industry is demanding that it was a dream come true as a subsidy scheme. It was a great scheme, but because of this small thing in between, for example, all the parameters, around 14 parameters, the 13 parameters are being kept, met by all the players. Only one parameter of delay in localization is there, which has to be some resolution, which is not being there for last 12 to 15 months. So industry is demanding a rapidness or quickness of resolution so that the next year is also not lost, means the current year, FY24. Because last year we lost everything. At least this year we can resolute, and it is very easy resolution. Just sit across the table, decide whatever you want to do, go back onto the track, and go back onto the national thinking and aspiration of making it happen at around 80-70% of the petrol two-wheelers to become electric in 12 years. That is basically the point.
Mr. Gill, we'll come to whether the FAME subsidy should be and will be extended or not. But just to sort of rebound the point that Mr. Sudhendu Sinha had just made some time back about the ministry really checking whether the Make in India targets on EVs have been met or not. How confident are your association and society members that they have strictly followed the guidance of Make in India as far as securing the components and not just assembling imported components is concerned?
All the players individually and collectively have been saying that today, for the last 6 months, everybody has met 100% targets of localization with best of the Indian companies called Exide, Bosch, NITI, etc., and all the A-class suppliers. But 4 years back, none of these suppliers existed.
Of course.
For electric vehicles, and the total industry that time during the FAME 2 was doing only 25,000 a year. Today we are doing 75,000 a month. At 25,000 a year, if those members were going to suppliers, and suppliers are not reporting to OEMs, they were going, please make batteries for us, please make motors for us. They were joking and saying, you are making 25,000 a year, you want to make batteries in India? For what? So what is being told to explain to the ministry is that it's not who did it and how much it was done. We should also go to the third step of why it could not be done by cross-checking with the suppliers who are not a part of the ecosystem of OEMs. And mind you, one more thing, electric vehicles are largely made as components from outside. For example, 50% of the cost of battery is not being made by OEM, they are being made by battery specialists. Again, 15-20% is a motor. It is not made by OEMs, it is made by specialist motors. So 75% of the cost of the vehicle comes from supplier, and those suppliers are not ready to supply in 2019-20 at a volume of 2,000 per month and 6 models. All that we are saying is, please give some sort of a flexibility for during those 2-3 years when this was the problem and also COVID came in between. Now everyone is okay for the last 6 months. Check, double check. And every parameter, quality, performance, speed, range, everything is perfectly all right. At least start subsidy on those while we are having a resolution of the past. And for the past, be a little flexible. Nothing is lost if there was a 1 or 2 years delay of localization and all other parameters were kept. So it is only sitting across the table, very easy to do.
Okay, let's get Arindam at this point in time. Arindam, you heard what Sohender had to say. He said even if localization norms were not met, other parameters were met. Government has set a rather ambitious target, and we are doing the best we can. COVID came in between. There was a delay. There is a supply side issue that we had little control over. But the government, of course, they're trying to pull the plug. What is the way ahead for FAME scheme?
No, I think this issue will definitely get resolved. I don't have any doubts on that. But I think a very important point was made by the gentleman speaking before me, which is the differential in costs or the component of cost when it comes to, let's say, electric vehicles. I think all of us know that around 40%, if not more, of the total cost is accounted for by the battery in any electric vehicle. And that's a key commercial determinant when it comes to the buying decision. I think one of the policies which has been announced, but which is yet to be implemented, becomes very important in that context, and that's the battery swapping policy. Because once implemented, that has the potential to do two things. One is it has the ability to bifurcate the electric vehicle into the rest of the vehicle vis-a-vis the battery. And if battery as a service, which is the concept being pioneered by the government, if that gets adopted, then automatically what will happen is electric vehicles can get registered sans the battery. The valuation, the pricing differential between an electric vehicle and an internal combustion engine vehicle would come down. Yeah. And battery can be offered, the battery swapping facilities can be offered to the consumer at a cost. So I think looking forward, that is one of the key aspects which really all of us need to focus on. And I am hopeful that whatever differences of opinion are there in terms of standardization of the batteries which are to be charged, those get resolved very quickly.
Okay. We were discussing this, Kartik. Instead of a pre-sale, some sort of incentive, this could be a post-sale incentive where you would allow for more charging stations, a better ease at battery swapping, better e-mobility solutions, all in all develop infrastructure for electric vehicles in India.
Correct. So again, I think there are both sides to it, and I'm not sure Mr. Gill would be very happy with an arrangement like that because he represents the manufacturers of electric vehicles. But at the same time, you may be able to incentivize buying an electric vehicle by subsidizing the one-time cost of purchasing it. I think there is as much need to focus on the post-sale experience by setting up, like Arindam was mentioning, battery swapping infrastructure, charging stations, e-mobility, highways, and overall the convenience of owning and riding or driving, as the case may be, an electric vehicle rather than just buying one through a subsidy, which I think the government, even if it were to extend FAME beyond the end of this fiscal for another year, another 2 years, it is only subsidizing the cost of ownership, not doing much in terms of the utility and post sales of owning and really experiencing your electric vehicle.
Okay, let me come to Sudhendu. Sudhendu, where is FAME headed from a government's perspective right now? We are given to understand that the policy may continue if there are unexhausted remaining funds with FAME 2. We don't know whether that's going to happen or not, but what's the future looking like for subsidy on the pre-sale of vehicles, electric vehicles?
So you see, as far as post-sale thing is concerned, in the existing structure also, charging infrastructure has been incentivized. But yes, what other enablers, in what form they should be incentivized? My sense is that yes, the enabling infrastructure should be incentivized. Charging infrastructure is one area that should be incentivized. Those who are aggregators for four-wheelers, we are supporting them. Similarly, those who are operating the vehicles, let's say public buses for example, they should also be, some support can be thought of. So, and battery swapping is a new thing that is gradually getting into the space, that could also be taken up for support. What I am trying to say is that now the stage in which we are there, the enabling infrastructure have become all the more critical than the actual sale of the number of vehicles. So my sense is that there should be a very harmonious kind of balance between these two, and that is how the support should be planned.
Okay, you know, I want to talk a little bit more about battery swapping and how that infrastructure is going to operate, what will be challenges around it. But before I do that, Sohender, I want you to come in here. It looks like the government is in no mood to extend FAME subsidy. Been hearing about this for a while. What would you do further to this if FAME subsidy does not continue? I know that you're looking to at least get the money back from the government to what they have pledged and what you have sold. And what about the inventory? If you could quickly take us through if there's any inventory left as far as, you know, FAME 2 is concerned. What's the way forward for EV makers from here on if the subsidy goes away?
No, that is why the emphasis is there that every battery should have an independent identity, you know, like our mobiles which have got an IMI number. So similarly, there should be an...
Sorry, I would like Sohender to come in here at this point in time. Sohender?
It will be very unfortunate because we are at a nurturing stage, like a sapling, where everything is coming into place. For example, localization is perfectly achieved. Swapping policy is a great policy, like Arindam was saying, has just come into forth. Charging infrastructure is coming on. With this, everything in place, if you increase the price of a vehicle beyond the reach of a customer, there will be a total derailing of two-wheeler electric vehicle for many years. Nobody, as I told you, is going to look at total cost of ownership or an enabling structure if he has to buy worth 2 motorcycles equal to 1 electric scooter, right? So at 4.9% electric mobility conversion out of the total, it is too small a base, too little in volumes to pull the plug. When it reaches, all over the world we have seen, when it reaches around 20% conversion for a petrol vehicle or a dirty fuel vehicle to electric, that is the time to taper subsidies. Problem is Exchequer doesn't have that much of money. And we know that where from this 50,000 crores will come. That's why we have been saying time has come for the large players to start either becoming electric or footing the bill for electric, which means some sort of a green cess or something, or something has to be levied in order to create that kitty to be able to take electric vehicles to a level where they can themselves take off beyond an inflection point. It is far away today.
Okay.
But Mr. Gill, sorry Shweta, if I can get a minute with Mr. Gill. Mr. Gill, but for the large players also to set up, then, you know, there has to be a very clear business model to it. Minus the subsidies from the government, will the big players, the large brands in the automobile sector really find it lucrative to go in for mass manufacturing and sales of electric vehicles?
See, the large players have got the advantage of PLI. The MSMEs and small players have not got any of those advantages, so there is a different level playing ground. Right. So within that, and large players have large muscle power, they have deep pockets, and they can take it as a project expense if they're really serious, because one day a country will bring electric. So from that point of view, they are insulated from the problems of those 2026 startups and MSMEs who started this electric. I think we should not make them die out. Let both the types remain, large and medium, and let there be healthy competition where battery swapping will come out in a big way. Already many members are doing 20% of the business in battery swapping. Other things will come. This is too premature to sort of such a grand idea of India to become carbon neutral and being crude oil from point of view of being able to self-reliant. It's too premature in time to pull the plug, and country will be paying a heavy tax because of that.
But you already have large players, sir. You have large players like Hero Electric. You have a fairly large player like Ola in the business of electric two-wheelers. I mean, who else do you see in the two-wheeler space coming in? And even if you were to talk of four-wheelers, you've got players like Tata already in EV space. You've got players like even MG, as recent as 2 days ago, launching, a small-sized, low-cost electric vehicle. So the large players are also coming in. So, do you expect more number of large players to take a hit on their P&L and budget it as an expense and really go and experiment with this case with PLI but without the FAME subsidy?
Not at all. There are a number of players and there's the intention of those players. We have seen the entry of large players only lately. One is that, right? They were fence sitters. Till the time they were bulldozed by our ministers and all that, you better become electric, right? That's one. Second is that whosoever has come in are fearing inconsistency in policy and transparency of policy in the future, what will happen. Third is they have a large 99% portfolio on which they are sitting and trying to protect that, thinking that they will be able to protect it till the time they are pushed against the wall. When will that time come? So they are there but not there. You have seen the numbers, except Ola, which is doing good because of some other reasons. All the numbers of Hero Moto has done less than 2,000 in 5 months. Imagine the number of a company which does in 1 hour 2,000 and so many others. So large players have to be serious players also. No? And they are losing PLI benefit year on year. And they are keeping on dirtying the cities, air polluting the cities, and also not taking care of the national mission. So they have to be the nudged, pushed, or they themselves have to come into jumping into this foray. Otherwise, it will always become jungle raj for everybody.
Okay. Let me come to Arindam at this point in time, and also you, Kartik. We've been talking about battery swapping for a while, and that looks very lucrative from the outside. But the larger question on what happens to the life of a battery? What if you swap a newer battery for an older battery? How does the entire ecosystem operate? Do we have any clarity?
We need to understand that, and I think Mr. Sinha will be the best person to
Absolutely.
answer that. But I think how I see the challenges that I see from the outside, I'm not part of the industry, but journalistically, if you look at it, it's very difficult to fathom a station in the middle of a highway where you take out one battery and it is replaced by another battery for a private vehicle. I think there is a better case for a battery swapping arrangement to work for large vehicles like buses. But for a private vehicle, you're driving a particular model that will have a certain capacity of a battery, a certain size of the battery, a certain vintage of the battery. I mean, your battery could be as little as 6 months old, but what it gets swapped with could perhaps be 2 years, 3 years old. And do you eventually ever turn around and get your battery back? It's like, in our childhood, we would write our names on currency notes and hope that someday they're going to come back to us. They never did. So will the battery that you actually paid for and an expensive piece of equipment, is it ever going to come back to you?
Okay.
So I don't see a case really for private vehicles to really avail of the battery swapping facility.
Okay, Mr. Guha?
Well, I think that's a very valid point. But the issue there is, you see, like any new industry, there will have to be a proper set of regulations for ensuring quality of service. So, for example, if you are talking about swapping, see, the basic principle is that once your battery gets discharged or you are not able to operate it beyond a certain number of kilometers, you swap it with a fully charged battery. Now, naturally, the age of that battery, which replaces my current battery, may be different. And that's where the regulations come in. And that's where the quality standards come in, which every player in the swapping industry or the swapping life cycle has to guarantee a certain standard of service so that the consumer is comfortable. Because I do see swapping as making two very important contributions to this sector. One is, of course, as we discussed before, it could help in addressing the differential costs at the time of buying the vehicle. If somebody provides battery services as a service, okay, that's one. The second issue really is that this uncertainty in terms of the charge running out for long distances, or let's say, in Indian cities which are heavily congested, that also gets addressed if we have a good, proper network of battery swapping centers. And the third and equally important point is that this is also an opportunity for the small and medium enterprises to set up maybe specifically medium-sized enterprises or even the slightly larger of the smaller SMEs, which can operate this segment and create livelihood opportunities. So
Ever
I
get my
think this
battery
is a
back
very
is my
important
question,
component.
Arindam. Even if the SMEs come in, even if you have great infrastructure, am I ever getting my battery back? I'm on a highway, I take my car, it's out of battery, I swap
No,
it
I
for
think
another
those
battery, I drive
safeguards
around,
can
take
be
another
built
route.
in as part of the regulations. No. I think, Mr. Sinha talked about identification of batteries. And the moment you are using specific battery identification, the life, how old it is, etc., all those get captured. And that's where the regulatory framework has to kick in so that the consumer at the end of the day doesn't feel that he's lost any particular value as
Okay.
such by participating in this ecosystem.
Okay, let's get Sudhendu Sinha at this point in time. Sudhendu, will the customer ever get their battery back? That's the big question here. If not, aren't there threat of maybe perhaps black marketing, spillages? How do you contain that?
No, that is why the emphasis is there that every battery should have an independent identity, like our mobiles which have got an IMI number. So similarly, there should be an independent identity, what we call the unique identification number of a battery, that should be there. So there are so many measures that our people are thinking around, that what to do so that the threats and the apprehensions that you are mentioning about, that is taken care of. Yes.
Okay. What's the priority conversion for government vehicles into EVs? Public transport, two-wheelers, four-wheelers, how does it work?
So you see, these are two different streams. One is the private owned vehicles and second is the vehicles which are in public stream. My sense is that two-wheelers and three-wheelers in the private stream and the buses in the public stream, they are the first to be getting into gradually electrification mode, and that is what exactly is happening. You are watching that Government of India has given some support on another, at different stage. It could be financial support, it could be demand aggregation, it could be, all of the different type of support has been planned and has been given for public transport, for example. So we are going in, we are thinking how to decarbonize our public transport systems, and that is why very ambitious national electric bus program has been launched, whereby we plan to support some 50,000 buses. That is a big number. That is a very big number, you see. So my sense is that as far as public transport and electric buses in public transport is concerned, that would be a massive change, massive transformation in India. Similarly, in two-wheelers and three-wheeler stream also, you see, it's a phenomenal. The pace at which it is moving is absolutely top class. That is the reason why internationally India is considered as a happening place, because it is taking its electric mobility in a completely structured and on a fast track mode. Yes.
Okay. Let me get Mr. Gill here. Mr. Gill, you heard what Sudhendu Sinha had to say. There, it appears to me, is a trust deficit between the government on one hand and EV makers on the other, and that could perhaps be the reason why the famed subsidy is not likely to continue. What are you going to do to bridge that trust deficit? Are you in conversation, with the top brass at Ministry of Heavy Industries? What have you heard from the power corridors at this point? What are you picking up?
Yeah, but before that, I'll just point out two small things. One is the battery swapping. In majority of cases, battery does not come back to you because you don't own the battery. And that's why the cost of vehicle goes down. So it's a battery belongs to the battery swapper. It is his business. And that's why it's a very successful thing. You don't have to worry about old or new batteries. That's one. Second is, as far as trust deficit is concerned, not at all, I believe, because it was there with the earlier sort of executives who have all left ministry, and we were sort of against a blind wall. But lately, with a new set of people, there is an absolute, lot of interaction that is happening, and jointly there is a possibility that we are working out on a resolution. It's only the time previously lost, because it started happening only 4 months back. 12 months were already lost. So the members on the brink of bankruptcy now, many are filing bankruptcy, many are going out of business. So it has come to a stage where urgency is so much. In the next 15, 20 days, if it doesn't happen, you will have a list of people who have said that, okay, we can't continue any longer. So there is no question of trust. It's a confusion.
Okay.
Confusion created by perhaps, looking back, by set of those mails, dozens of mails which came from somewhere, I don't know, inside India or outside India, which had that type of an agenda of derailing, and they were successful in derailing to a large extent.
Okay. So if the government is listening to you now, what have you heard? Are they likely to continue? I mean, what we're picking up from papers could be different from what you're hearing from the government.
Yeah, it's not reached a stage where government is committing it is going to continue, because within the government, executive says it's not in my power. It has to come from politics. The budget is not in my hands, so somebody higher up has to give me the 10,000 crore to continue. So I'm waiting for that to happen. But they are very clearly saying that we are with you for an early resolution, and this way, that way, whatever, not from a 0-1 situation. It will be some sort of a reconciliation, and very soon we will be able to find a common path to keep the 13 people back on track. Everybody is bleeding, everybody is suffering.
Okay. Before I wrap up, I want to get Mr. Guha back again. Mr. Guha, you heard what Mr. Gill had to say. There is no trust deficit as such. We are in talks with the government. It may happen, it may not happen. What are your expectations as far as FAME subsidy is concerned, and what's the future looking like for electric vehicles?
No, I think there is only one way to go when it comes to electric vehicles. That's upwards. India as a country doesn't have any other option. And I think this is too small an issue to fester on it. It get resolved. I don't have any doubt on that. But there are certain other larger issues which need to be addressed. As all of us know, this is not merely a government of India subject. The state governments also have a very important role to play when it comes to actual implementation on the ground, whether it's setting up infrastructure to manufacture chemical cell batteries or electric vehicles. Those kind of subsidies and other support measures, land, etc., those have to be ensured. It is also closely related with a set of other policies like the vehicle scrapping policy, which are again dependent on the state governments. And as all of us know, just like in the central government, there are 4 or 5 ministries which are working hand in hand to implement this or get this transition implemented. We have a similar number of departments at the state government level as well. So I think it's also a question of proper coordination and the state governments working hand in hand with the government of India to ensure implementation, quick implementation on the ground, whether we are talking about government vehicles or incentivizing 3-wheelers first, 2-wheelers, and then maybe 4-wheeler private vehicles.
All right. Sudhendu Sinha, Arindam Guha, Sohender Gill. Gentlemen, appreciate you joining us with your inputs on that story. We're going to move on now. If you buy designer clothes, go on extravagant holidays abroad and pay for luxury services, the government is on to you. As a way to find tax evaders and broaden the tax base, the Central Board of Direct Taxes, CBDT, is looking to tighten the noose on high-paying individuals or people who buy a lot of luxury goods and products and services. Remember, the aim is to widen the taxpayer base by 10% from 86 million from 77 million to about 86 million in financial year 24. Now, reports suggest that a central action plan is in the works on tax broadening measures such as tightening the organized collection of data from various agencies and third parties and proper checks on statements on tax deducted at source and tax collected at source. So, if you are evading tax and are found to be spending too much on luxury services, you are likely to be caught. Joining me at this point in time is Shrimi Choudhary, who's the senior editor, Business Standard, broke that story today. Also with me, Amit Singhania, who's a tax expert. Coming to you first, Shrimi, it appears that government is finding new innovative ways of finding tax evaders. Shrimi is not with us. Kartik continues to be with us in the newsroom. Kartik, same question. Looks like new innovative ways of finding tax evaders. This time, looking at your purchases, perhaps going a little too deep into what you're spending.
Not really, Shweta. If you recall, any spend in excess of 49,999 rupees, 50,000 and above, was in any case always mandated to go along with your PAN number.
Okay.
So even if you went and you made a purchase at a jeweler, swiping your card, I'm not talking about the cash economy, and I believe for the larger sake of the country that India has truly become cashless and is moving in the right direction to become cashless. But any high value purchase that you did in the past, whether you bought a car, whether you bought an air ticket, whether you went to a jeweler and bought some gold, any time you spent more than 50,000 rupees, you were asked to give your PAN number.
Okay.
In fact, even in banks, if you deposited a check which was valued at 50,000 or more, you had to fill in your PAN number. So I have a feeling that that yes, this has been in the works for a while, but now with the linkages with, let's say, Aadhaar coming in, with linkages overall using technology in the economy, it now becomes a lot easier to identify and find a grid of all the transactions made by an individual in a financial year, because your PAN and your Aadhaar is linked.
Okay.
You've gone to a hotel, you've stayed in a hotel, that hotel has a certain room night, you've given your Aadhaar as your identification to check into the hotel. It's easy for the government now, using
to technology,
using the India stack, to connect the dots and really arrive at individuals who are spending money in exuberance,
okay,
and correlate that with their tax filing.
Okay.
So if you're spending 10 lakh rupees in a year, but you're filing tax for, let's say, even 12 lakh rupees or 15 lakh rupees, it's difficult for you to actually spend 10 lakh rupees on an income of about 15, or a declaration of about 15 lakhs.
Okay.
So I think the linkages will become easier using technology.
Okay. So if it's already happening, then there is no point of making it tighter, because you're already getting all the information. And just before the show, we were discussing as to how even my bank account is linked to my PAN number. The moment I make a transaction,
yeah,
the money is debited,
yeah,
that in itself registers in my statement, and therefore it's relatively easy for government to trace that money back to me.
With your bank account, yes. Using your own debit card, your own credit card, yes. But the point is, you go and you buy a piece of jewelry using money that does not get debited from your account. You've used somebody else's card, you've used somebody else's cash, you've used something else. You still need to give your PAN details along with it. So that now becomes easier to track, is my understanding of how this is going to function at the cusp of technology, at the cusp of data science, at the cusp of using all this, collating all this, and really arriving at high spenders rather than high earners, and which is where the difference really is.
Okay, Amit is getting through, but before I go to Amit, I want to, one last question. Most of these transactions, and you rightly mentioned, when it happens in cash, it becomes very, very difficult to trace where the money is coming from. Unfortunately, whether we like it or not, most of our economy is still informal, which means there's a lot of cash transaction. If I'm going to buy something, and if it's a luxury product, if it's 1 lakh, 2 lakh, not everybody, and for that matter, gold.
Yeah.
If you go to a small jeweler, they're still ready to accept that cash, and that cash is unaccounted for. So therefore, you fall off the preview of tax net.
Very true. But thankfully, the news is tightening on GST and on acceptance of cash, depositing of cash. I understand, I feel the jewelry economy, the jewelers are still, whatever we may like to believe and see in numbers or not, would still be running on cash. And it's very, very difficult to change that entire process of getting them to not accept cash. So that's definitely a very, very difficult spot to be in. But if you were to book, let's say, a travel, if you were to buy a new iPhone, if you were to go to a mall and a formal area of transaction and try and offer cash, a lot of players today are skeptical of receiving that cash.
Okay.
So that fact remains. Of course, the jewelry market and the overall cash transactions in the informal economy will continue to be hard to track.
Absolutely.
But hopefully, with penetration of UPI and overall the dominance of cash going down, hopefully that should get solved as well.
Okay. Amit is with us. Amit, I think it's a state question. When it's payment made through cash, absolutely no way of tracking it back to you. But as Kartik pointed out, more and more money is now being paid through digital ways, be it UPI, debit card, credit card, and therefore that becomes relatively easy to track back. My bigger question is, most of these transactions that happen, if it's outside a mall, outside a big facility or a big service, if it's a small jeweler in a tier 2, tier 3 state or a city, they still are likely to transact in cash, in which case you cannot really identify them.
Yes, yes. So if you are doing a transaction at a small trader or at a small shop, which is not required to report its sales turnover, and probably that particular trader or a shopkeeper is also not filing the income tax return, then yes, currently also it is not possible to trace back that particular cash. So that kind of lacuna is still there. Look, but if you see from right from 2014 onwards, before rather, I would say rather 2012 to the period prior to 2012, and after when the GST has enacted, you will see a significant drop into the cash transaction. Look, that's a very good aspiration to achieve a 100% cashless economy, but it's not practically possible to achieve it. We are closer to a cashless economy, but still these kind of lacunas still exist into the system.
Okay. Shrimi, who is the senior editor at Business Standard who broke that story, will be with us very, very shortly. But before we go to Shrimi, Amit, we understand that these are new innovative measures that the government is taking to broaden the, the tax net. How effective are they? How effective have they been when tax base in this country is concerned? What sort of expansion have we seen in this year and last year?
So look, in this particular year or in this particular budget also, we have seen certain measures have been taken to expand the tax base. We are not very sure whether these particular measures are going to give the desired result. For example, if you see, there is a TCS which has already been introduced for the purpose of any kind of a payment made outside of India. The TCS rate has been increased to 20%. But I would not say this is a tax widening measure, because once the transaction is happening and the money is remitted outside of India, it is through the banking channels only. So that particular money is already into the system. It's only the tax collection which has increased, or rather which will increase from these measures. But if you see the other measures, for example, when you purchase a house property by selling off another house property, now the cap has been made to 10 CR. And that's also once in a lifetime opportunity for Section 54, one can avail it. So real estate is one of the mechanisms where the cash transaction still happens, and the government is trying to curb the availment of the exemption by the HNI. So these are the measures which may give you the desired result in a very long period of time. But whether these measures are going to get into a trapping of the small taxpayer, to my mind, answer is still no. Small taxpayer is still outside the net, and with these kind of measures, small taxpayer may not even come to a net. For the purpose of getting the small taxpayers into the net, or the small individuals who are not making payment of any kind of a taxes, although they are liable to make a payment of taxes, I think the tax department needs to use more of AI tools, more of the information database, try to collect more and more information, and try to use that database to catch those tax evaders.
Okay. Shrimi is joining us at this point in time. Before we go back to Amit, Shrimi, congratulations on breaking that story. You've talked about a central action plan that CBDT is working on. Could you perhaps share some details with us?
Yeah, sure. As we reported today in our paper in Business Standard, CBDT, which is an apex body for direct taxation matter in our country, it prepares a central action plan every financial year. So where they decide the strategy, how to go about it, how to widen and deepen the tax base. And accordingly, tax department take reference from that center action plan and act on it. So this time around, for FY24, they wanted to, so they're aiming to increase tax base by at least 10%. So if you see the official data of FY23, the total number of returns which have been filed is around 7.8 crores. So now for FY24, they sort of aiming at that they should increase it to at least 10%, which comes around 8.5 crores. So that's the target. Now, how to achieve that target? So they have highlighted, certain strategies, certain loopholes, and they want to sort of plug those leakages where they think that information gap is there. So for example, they're saying that SFT, which is specified financial transaction. So there are certain reporting entities which supposed to report and file statement of SFT if there is a transactions exceeding the threshold limit of what that is prescribed in the direct taxation laws. So what is happening is in certain areas, for example, IVF clinics, people go to IVF clinic for availing services, hotels, banquet hall, luxury brand retailers. So those transactions when people take services or purchase goods and high value goods actually, that information of transaction is not coming to the tax department. So what they are saying is that ensure and have a verification mechanism where you ensure that you getting all those information. So all those reporting entities which are mandatory to give those statements should report to them. Now, interesting point is, if you see the reporting entities, I'm talking about, banks, post office, almost all the financial institutions, including stock exchanges, they are supposed to file this SFT. Even SSC is supposed to file if they are, purchasing a high value good. So if I am going to have a cash transaction in a certain store, maybe I'm buying some luxury brand stuff, I'm supposed to report that. And if I'm not doing that, I will be held as non-compliant to SFT, and I may be penalized for that if they sort of found that later in my tax filing. Similarly, they want Bureau of Immigration to give all the report in a very efficient manner in terms of foreign travels, especially if your stay is 10 days or above. So they want that they should get data from Bureau of Immigration. Anyway, they are supposed to file that statement where they give the all the amount if they are exceeding 2 lakhs and above. But even if they are not giving it, it's on the tax department that they should get those data and match it with the tax return, that whether these taxpayers are paying the sufficient tax which they are supposed to, and if not, then they should come under the tax net. So even the other expenses like electricity bill. So of
I
course,
was about to come to that, Shrimi. What comes under the ambit of extravagant payment? From what you've written, it says your visit to fertility clinics, a high electricity bill, including if you're going, of course, on a holiday, you're buying a luxury good, a bag, a dress, all of that and more.
Yeah. So these are the areas where SFT is that's what I was mentioning, that reporting entities like all the financial institutions supposed to file that statement. Even SSC, like me and you, if we are purchasing some high value item, like for example, luxury brand purse, if we are purchasing, we supposed to file that statement with the tax department. So a lot of people who are not under the tax net maybe not filing the tax return, but getting indulged in high value transaction, they're supposed to file it, and that's how they're able to know that, okay, this is the person, this is the source of income, and they will actually match that with your tax return if you are filing. And if you're not filing, they will send you notice that, you're supposed to pay tax on it.
Are these mutually exclusive, Shrimi? Does this mean that only those who are not yet filing the tax return, but indulging in these extravagant expenses need to report, or even those citizens like us who continue to file our taxes year on year, and from the salaries that we draw on which we file our taxes, but we do end up indulging in, let's say, an overseas travel, is it becoming applicable for us also, in addition to our tax return, to mention these SFTs?
See, SFT as a concept, if you remember, earlier there was a concept of AIS, Annual Information System, which they actually, renamed it to SFT. So there are two aspects to it. Of course, one about the financial institution who's supposed to report, and second, SFT itself supposed to report that. So me and you is already, we are salary class people. So of course, our TDS has been cut, and they know that we are the taxpayers.
Yeah.
So idea here is to, identify the potential taxpayers who are not filing the return, because see, the ultimate goal is to increase the tax base here. Of course, deepening the tax base is also one point,
Yeah.
but they are more focusing on, getting more taxpayers into the system, getting more people into the system. And that's why they are saying that a lot of people are non-compliant, where they are not reporting such transaction which exceeding the threshold limit prescribed by the income tax laws.
So largely, are we now looking at getting perhaps non-earning dependents of tax-paying citizens as part of the larger tax net? So would, let's say, would a child going to college purchasing a high value item like maybe a designer purse, for which the payment has been made by the mother or the father who are earning and tax-paying citizens, but the name that goes on the invoice is of the child, does that sort of now, is that the definition of widening the tax net in this way? Because I presume anybody who is indulging in these luxurious adventures knows for a fact that at the end of the day, you're not paying for these items in cash. You book a ticket, you're not, no travel agent today is accepting, I mean, hopefully accepting a cash payment. No luxury brand you walk into a retail store will accept, cash without really taking your PAN number. So is widening the tax net here really a numbers game, or is there actual tax evasion that will also likely get curbed and curtailed with this measure?
So, of course, tax evasion is always the point which they, try to sort of, fix that because they suspect that there are transactions happening in cash, especially when you go to such clinics, banquet hall for marriages, etc., for any party function. Lot of transactions still happening in cash. So what they are trying to curb is, if you are doing that, please report to us that we are getting into that transaction. Now, if you are asking that a child purchasing a huge sort of item, so of course they are not going to, they are just matching it. It's remember, it's an internal central action plan. It's not for, it's not for the public domain that you and me should know that what is going on and how they are doing the analysis. They will, of course, match it to the income. They will do the whole profiling of that, kid who is purchasing such high value item, and then only they will perhaps send notice and ask you that how, purchasing that and what's your source of income. The second important point I want to highlight quickly here is that TDS credit is also very important, because if you remember from last 2 years, we have been seeing a lot of tightening in terms of new age sectors like cryptocurrency and online gaming. So the entities who are running these, they have these TDS credit available. Even that they are not filing the tax return somewhere, and that's the observation they had. So they are also saying that we should keep a close watch on them, that whether TDS, they are deducting the TDS or not, ensuring that whatever the tightening they came out with in last 2 years in terms of cryptocurrency, for cryptocurrency exchanges and even famous, they should file the tax return.
Right. Shrimi, extremely sorry, we've run out of time. TCS, TDS, an interesting conversation, Kartik, we've had just a couple of days ago. We will come back to that, of course, as and when there is a reason to talk about TCS and TDS. Shrimi, Amit, thanks very much for joining with your inputs on that story. And with that, it's a wrap on Business Plus. Keep watching News 9.